Hey everybody, welcome to today's video. In today's video, what we're going to go over is the 1 hour strategy that I use and have been using for over 4 years in my trading and has been proven to be profitable as it has been back tested, right? So if that sounds interesting, please do stick with us until the end. Don't forget to subscribe, share with a few friends that you believe the video will be of help to them, and turn on that bell notification so that you'll be notified whenever we release content. Now, if you stick with us until the end, I'm also going to share with you guys a few pairs that I'm watching. The 1 hour trading strategy is actually the same 1 hour strategy that I've used to get this beautiful entry opportunity here that I shared in my free Telegram group. By the way, if you're not in it, please, the link is in the description below. You don't want to miss out because you're missing out. You just missed on this beautiful trade. Anyways, let's get it. So the strategy that I'm using, or the 1 hour entry strategy that I use, is actually based on pure price. So for those that know me or that are not new in the channel, actually understand that I only use pure price action, right? So I don't use any indicators. I don't use anything apart from pure price action. And the reason for that is because indicators, what they actually do is that they just derive information out of pure price and they give you that indication of what's probably going to happen. So for instance, if prices are selling like this, right? You see here we have this sell correction continuation, right? What will happen here is that an indicator will tell you, okay, the prices are oversold. There is a possibility for prices to now start buying again. It's just because prices have dropped very far. And for me, relying just on that to actually take a trade, to risk my hard-earned money in it, I find it to be very, not reliable. Obviously, there are some people that use indicators and are making loads of money in the markets, but that's not for me. They say everybody has their own trading style, right? You got to find yours. But the strategy that I'm going to show you will actually benefit you in any trading strategy that you use, right? As long as it's back tested, profitable, you're good. Cool. So let's dive right into it. So with the 1 hour strategy that I'm going to show you, you actually need at least 3 time frames. You need only 3 time frames, and we are obviously going to do it on this CAD JPY. We are obviously going to do it on this CAD JPY trade because it's the one that I sent yesterday, and we're obviously going to use it as an example, right? Cool. So the way I always do is that I use at least 3 time frames to actually arrange the market conditions, or to know that the market conditions are in my favor, right? So before I actually place a trade. So the first market, or the first time frame I use, is the daily, right? So I always start from the daily, as if it's a new day, I just open the markets. The first time frame that I look at is the daily. And then after that, I can go to the lower time frames, switch it up a little bit and see what's really going on down there. But when I start my trading day, the first things first, I look at the daily. Who was in control yesterday? How did the candle close? Is there still momentum in the direction of whoever was in control? Because you also need to understand, if there's momentum, then there's a possibility of price to continue in the same direction, right? And once you realize that, you can actually place yourself in a better position to actually take advantage of the move, right? So that's why I always start with the daily, understanding who's really in control, what's the trend like, and so on and so forth, right? So with the daily, you start off from the daily, and then you look at who's in control. For instance, on the CAD JPY here, if we look at it, we can obviously see that the bears are in control, right? Because the bears are the ones having these big candlesticks. And what I always look at also is for the anchor candlestick. The anchor candlestick is nothing more than a candlestick that shows, or the biggest candlestick. I can just simplify it like that. The biggest candlestick in the trend, that's the anchor candlestick. So if we look at this, for instance, trend right here, the biggest candlestick is this bearish candle because it actually engulfed this bullish candlestick, and there's no candlestick that's bigger than that. Today's candle hasn't closed yet, so you can't really consider it. So we just leave it at that. This is the anchor candlestick, and it's a bearish candlestick. So even if today's candle becomes bigger than this candlestick, still there's no harm done because it's still a bearish candlestick, right? They're all pointing in the same direction. So From the daily, what I always look at is the trend, and what's the anchor candlestick, who's in control. And then after I realize that, I go to the 4 hours. I go to the 4 hours. I look at what's the trend like. Obviously, here we can see the trend is bearish. We had the highs up here. We had this low, and then we had this kind of correction. Prices just broke below that low, indicating that the bears are still in very much control. So from here, we've already secured at least half of the trade. So even if prices come and stop us at break even, we already made money, so there's no harm done. But currently, what I'll be anticipating to see here is prices to retrace a bit before we continue pushing lower until our targets are hit. Now, with the 4 hour, what you need to look for are the main structures. Like, because in the 4 hours, the daily, you can get the trend, the whatever, right? And by the way, this is just, I'm showing you how to enter the markets. This is not the whole strategy of how I analyze the markets. If you want that, there's a link in the description for the full course. But this one right here is just how I get those 1 hours, right? Now, on the 4 hours, you look at the main market structures. Like, for instance, here, you can just notice them. Like, for instance, this year, right? Because you can see here, this is the most recent low. We have this, although far, and you can see that, right? So in our understanding, we say like, okay, cool. Now prices, after we took that trade yesterday, have broken past these two market structures, right? Now, these two market structures can act as our confirmation points for continuations, right? So for instance, here, we might be looking for a continuation here. If prices break above here, we might be looking for a continuation somewhere here, right? All right, cool. Now, after we have that, we actually go to the 1 hour and look for the entries. Now, the entries, you can see how prices are rejecting off this structure, right? So the market structures are actually very good. So after we've seen that, we'll be looking for entries there. But now let's go back to how we got this trade, for instance, yesterday. Yesterday, after we saw all that, we noticed that prices broke below this market structure here, right? Broke below this market structure, and we are looking to get this continuation move, right? So after prices broke below this market structure, we took our short trade here. We took our short trade here. Obviously, after we saw this impulse move kick in all the way from the 1 hour, after the structure broke, we understood like prices are very hard to come back all the way until up here. So we placed the stop here, and our targets, we targeted the next market structure that's low there. Now, with this one, you can actually understand like, okay, cool. Once you get that structure broken on the 1 hour, you can actually get in on the trade after the structure has been broken. Because with the 1 hour, you can actually even put a stop loss, for instance, here on the most recent swing high, because that's where you need to place it. And once you do it in the 1 hour, it gives you an advantage because the 1 hour doesn't really have a lot of movement, right? Like, for instance, this trade here, how many pips did we risk? It was about 42 pips. So we took a 42 pip risk, right? So at the end of the day, it's not about the number of pips. Still, even if we took a 42 pips risk, at the end of the day, you're still going to risk the same percentage on your trading account, right? So even if it's 100 pips, 200 pips, 12 pips, 11 pips, at the end of the day, we are just going to risk 1% of our total account, right? So at the end of the day, it all comes down to what's the structure like. So here on the 1 hour, you see, you have to place your stop loss on the most recent swing high, because if prices break above that most recent swing high, then the probability of prices continuing in the opposite direction are very high. And you want to cut your losses very fast and take advantage of the trading opportunity should the trend change, right? Now, the stop loss, that's why you need to put your stop loss in the most recent market swing high. And then from there, you can actually start looking for trading opportunities in case you're stopped out, for trading opportunities in the opposite trend. But until you're stopped out, if prices keep on pushing lower, once prices go 1 hour in our direction, you need to go break even, because the first thing as a trader is that you need to protect your capital. You need to protect your investment, right? So once prices go in your direction, in your favor, protect your capital, then that's that, right? All right, cool. So that's, I think, all I can share about the 1 hour strategy. It's just that you need to look at 3 time frames. The daily for the trend structure and all that. 4 hours for the main structures. The 1 hour, that's where you look for entries, and you'll be good. You'll be good. So as I said, you can use it in any trading strategy. You just need to confirm the 3 time frames: daily, 4 hours, and 1 hour. Now let's look at the trading opportunities that I'm watching closely and I'm anticipating to take a move from. So okay, we have first this. Look at this Aussie USD. Aussie USD, you can see here prices. Audi USD, you can see prices broke above this neckline. You had some kind of a double top down here. Some kind of a double top down here, double bottom. And prices broke above the neckline, gave us a retest, and we should be seeing a continuation until probably somewhere here. As you can see on the left-hand side, we don't really have any obstacles. It's a clean slate. Right? So with Aussie USD, I'm anticipating to see that. Not a lot of pairs involving the USD, though. I'm looking to take trades from, though. Mostly I'm focusing on JPY. As you can see here, the trend began, gave us a little range, and then broke above here. So I'm looking for kind of a retest before we get a continuation, right? Now you can see the bullish impulse move. It's insane. It's insane. Yeah. So there's a very high probability for prices to keep on pushing high on JPYX. Now let's look at the JPY pairs that we should be focusing on. The pairs that we should be focusing on, first one's Euro JPY. This trade here, prices have broken below this trend line. Yesterday, I believe in yesterday's session, we talked about it. We are looking for a break, retracement before we take a continuation to hit our first targets here. So right now, that's the same thing that we're still looking for. Prices have managed to break below. We'll just be waiting for kind of a retracement before we actually take the trade. Something like that, right? So Euro JPY, that's one of the pairs that I'm looking at closely, looking for entries to take the trade. We got GBP JPY. With this one here, prices are kind of ranging funny. They just broke below that. You can see that in the 4 hours. Now, if we switch to the 1 hour, you can see this, what's up. So should prices give us kind of a continuation from here, a bearish engulfing candlestick from here, we're going to take a trade, swing with it all the way until somewhere down here. So GBP JPY is another pair that I'm looking closely to take a trade from. Obviously, my entry will be on this 1 hour, right? 1 hour. Because see, like for instance, GBP JPY, I already noticed that the trend is now bearish, and it's bearish from a market structure. This was the confirmation candlestick. As you can see, it's a solid bearish candlestick. And then now if we go to the 4 hours, you can notice the trend. We had a high, we had the lows, we had a lower low, right? Now the trend is clearly bearish. So then we go to the 1 hour, we just look for entries. It's as simple as ABC. As simple as ABC. Straightforward, pure price action, back tested, obviously profitable. So let's look at the last pair. CAD JPY already having a trade in it. Aussie USD, we've talked about it. So yeah, cool. So guys, those are the trades that I'm looking for. Anticipating them closely to take trades from. So if this video has been of help to you, please give us a like, share, subscribe, turn on that bell notification so that you won't miss out on future content whenever we put out content, because it's on a daily. So I'll see you guys next time. Until then, take it easy out there. Let's make this money. If you're interested in learning more about how we trade, our course is linked in the description below. Be sure to check that out. Our ebook too, it's also linked in the description. You want to check that out. Other than that, guys, I appreciate you all. Thank you for being with me all this time. Thank you for growing with me. Till next time, guys, appreciate you all. Take it easy.